Hello everyone, today we're going to be taking a look at the market in a few different trading conditions. Now as you can see currently, this is in a short or downwards trend, and if you look down here, it says we're red, which means we're in a short trend. Now pretend we came into the morning, right somewhere around here. So your first red arrow would have appeared here, and you would look 3 ticks below this point, which it lines up with, and then when the market reached this point here, then you would have been short. And as you see, our price only moved down a little bit before it pulled back against us from the direction we were hoping it to move. Now what you want to take a look for on these trends is a pullback from its primary direction, and since this is a short trend, our primary direction is down, so we would rather wait for a pullback such as this to occur. Then you get your next arrow coming in here after the pullback, which lines up with about this point. So you'd look 3 below, which is at this level, and when the price reached this level, then you can get short. And as you can see, we continued on to have a nice downwards movement without really any heat against us. Back here you can see it might have only moved just a little bit against us before it did continue on. Whereas if we had taken it in this initial spot, we may have been taken out when the market moved up here. So all in all, it ended up being a nice trade. Now moving on to the next screen I want to show you. So here's the next market condition I want to be taking a look at with you. Now with this one, what we're going to be looking at is when the market is sideways, or as we also call it, a channel. And you can see down here right now, this was listed as yellow, so that means this is seeing it as a sideways movement. So if we came in the afternoon, after a little bit of time passed, we would see our first arrow is showing up right here. And we look 3 ticks above this candle to get our point. So we know the market has to move up here to get us long. Now you wouldn't see this channel had formed because currently that wouldn't be there. And I do recommend opening up past history so you can see what's going on. However, for this, we're just pretending this is what you saw, and you could have taken this long when the market got up here. And after a little bit of time, we did reach this point with the market. So if we got long here, up to here was a couple points worth, which a couple points is worth $100 in ES on a single contract. So you might have taken profit, or you might have still been holding it. Then after some more time passed along, we got to this point, and we got our first down arrow, and that matches up with this one, so we would be looking to get short down here. And currently we see history back to here, so we know we've got some potential range of movement from our entry point at 27.25.25 down to this low of 27.21.25. That's 4 points, or $200 on a single contract. Now if you look again at our entry point to the current high, that's just under 2 points, so it's not even quite $200. So that's a decent risk versus your potential reward if it moves down here. So after a little bit of time passed, we would then be short here, either reversing from our long we entered back here, or entering a new short if you were already taken out of it. So then as some time passed, we would have gone down to here, which would have been a 1.75 of movement, which is not quite $100. And since we're looking back at this point as our potential movement, we probably would have just held on and seen where it went. So we would have got a pullback against us, which would have been 3 ticks against us, before we continued on and got 2 points, which is $100 worth. And as you see now, we're coming back into the same area before, so the conditions are starting to look a little bit different. And it's slowed down here, so you may have squeezed in on this just to get something out of it, because it had already gone against you and now was slowing down at the point it had reached before. And now you can see there's a channel starting to form. Now after more time passes, we get our next green arrow, which would have come in on this candle and been 3 ticks above, so it would have been up here. Now you can see this is basically in the middle or even upper end of the range. So there's a reason you probably wouldn't want to be taking this. Our entry point is 27.25 half, and from there to this high is only a point and 3/4, so you don't even have $100 worth of movement. However, against you, you have over 2 points. So that's risking more than you're even gonna potentially make if it moves up here. So what you want to do in these sideways moving markets is get your signals so you can go short from these tops or long from these kind of bottoms. Now, when it's a larger range, you have more leeway of where you'll be willing to take it for what you're willing to risk versus what the potential reward is. So if we waited more, we would have seen these down arrows, which would have been right at the bottom of the range, so we wouldn't have wanted to take in those either. And then as you can see, time went by and we never really got anything in our favor, so we wouldn't have ended up taking any trades here until we saw our signals coming in at the top or bottom, or the market conditions changed. Now I have one final topic I wanted to cover for this video, so I'll be moving on to another screen. So there's just one more thing I wanted to go over quickly. When we start getting these red dots that you can see all around here showing up on candles, we just want to hold off on trading for then, even if this is currently green. So that's just one more detail I wanted to add in there. I hope this video helped you understand how to handle some different situations.